Welcome back. On today's video, I'm rolling out a savings game that is best played by couples, individuals. You can play this as well, but you lose that competitive aspect. So let's jump right in and talk about how this works. So the name of the game is Save and Claim. And how this works is a couple will sit down and say, we want to look at saving money in our budget. And you'll start targeting individual items that I'll jump into here in a second. And whichever partner obtains the savings, whichever one negotiates the savings or finds the savings or gets the savings or however they lock it in, and again, you'll understand here in a second, they receive the use of that money for 6 months for whatever they want to use it for. That, number one, benefits the net worth of the couple, and number two, again, it only stays in place for 6 months and then the savings goes back into the family pot. So here's a few items that I've kind of found, and you'll get the idea of the game as we go along. Number one, internet. And these are things that my family actually has done recently that have saved us a significant amount of money. Now, this isn't necessarily going to be life-changing in the short term, but stay tuned till the end and I'll show you how it can be life-changing as we go forward. So we were looking at different internet services. In our neighborhood, they just put in fiber. By switching to fiber from the old internet provider, we were able to save $10 a month. Annually, that's $120 savings. Now, it could have even been better. We actually upgraded our service to see if it improves the internet connections that we have. We went from a 300 megabyte service to a 600 megabyte service. A lot of people are going to 1 gigabit services, but don't really understand that they don't need that much, especially if there's only 2 people in the house. A lot of times 100 megabits is enough to provide all of the needs that you have. So maybe you go with a 300 megabit service and you save $30 a month. That can be significant over the course of time. Here's another item that we took a look at. By switching our cell phones from T-Mobile to Mint. With T-Mobile, we were paying about $100 a month for 2 cell phones. With Mint, we were able to pay, by paying in advance, get a $15 a month plan. Now, we weren't on the road, at least in areas where we could not have Wi-Fi a lot, so the data usage requirements or the unlimited data really wasn't a factor for us. And we found that by doing that, we were able to save $70 on a monthly basis. The funny thing is, Mint uses T-Mobile. So in our area, there's plenty of capacity. We're not seeing diminished capacity or diminished services. We're just seeing savings. So that was something that was very phenomenal to be able to do and not even see a change in our lifestyle. This was a big one. Now, for those of you who work for a company that provide health insurance, you may not realize the difference in the private health insurance market. But for those that are self-employed or whose employers don't provide health insurance, shopping around for insurance plans can save you a significant amount of money. Insurance is ridiculous, and it has been ever since there were some mandates put on the insurance companies. And we're not going to get political on this or get into the corporate structures, but just by shopping around and by changing the structure of how we were doing health insurance, we were able to save $200 per month. By installing a different thermostat, now a lot of people wouldn't think that's a big deal, but by going from a normal thermostat to a smart thermostat, we were able to to prioritize the hours that the power is used. If we're out of town, or if we happen to be working that day, or we're out of the house, whatever it is, the thermostats actually recognize that and reduce the power usage. They can also shift the times that the power is used, or whatever it is. So in one instance, the electricity is charged at a higher rate during daytime hours and a lower rate during nighttime hours. So the thermostat will front load. It'll turn on the heat or the air conditioning earlier in the day, and when the rollover rates happen, it'll use less power during the day as far as it can to maintain the comfort levels. But by doing that, the anticipated savings is at least $10 per month. Again, $120 per year. By switching from a bank account for our rainy day fund or emergency fund that did not provide interest to one that did, like a high yield savings account. Those are sitting around 3.5%, give or take, depending on where the Fed funds rate are. If you have a $10,000 rainy day fund, that can be a $35 a month gain in interest, or $420 per year. Something else that we saw is brokerage accounts. Sometimes just switching your money from one broker to another. And here's an example. E-Trade doesn't pay interest on cash that's sitting, but Fidelity does. If you're able to have an investment account where you gain interest on money that's sitting unused or that's being targeted towards other investments, but you're waiting, well, it's just sitting in cash on some brokerage accounts, you're not making anything, that can be a significant gain in capital. Here's another one, streaming services. Now, there's two different ways that we looked at the streaming services. One, with different subscription plans, like for example, Walmart Plus, they may provide access to a streaming service. Walmart Plus provides access to Paramount Plus or Peacock, depending on what you select. If you're paying for those and you're paying for Walmart Plus, you're getting double charged. But the other one that we looked at is doing a revolving system. We had Netflix and we had, I can't remember what the other one was, but if you're paying for multiple streaming services, chances are you're not really using it at all of the time. So what we decided to do was go revolving. We'll have 6 months on one, 6 months on another, and we'll just watch the content from each because it's on demand. It's not like the old days where you had an antenna and they broadcast the TV shows when they broadcast the TV shows. You can watch whatever you want when you want. And in this instance, I'm just assuming $15 a month for $180 per year, and it's starting to add up to real money. Insurance on your property. This can be a rental property, it can be your primary home, it could be insurance for business, whatever it is. Sometimes by raising your deductible, if you have a savings account or a rainy day fund or something along those lines, insurance doesn't get used a lot of times. So a lot of times if you have a lower deductible and you're just paying into it, you're wasting money. By just switching up the deductibles, we were able to save an estimated $10 per month, which again starts to add up to significant amounts of money. Something we have not even looked into in this instance because we've done it in the past is switching car insurance or calling the insurance companies and raising deductibles on your cars, or getting rid of full coverage or coverages that you don't need, or just by switching insurance providers altogether. And by the time you're done, you start to add up to an amount of money that actually means something. And in this instance, $350 per month or $420 per year. Now again, remember the purpose of this game is to start saving money, but the person who finds those savings is able to have use of that money to improve the family's financial standing for 6 months. After that, the couple needs to decide what to do with it and hopefully doesn't go back to spending it again. But if we take that $4,200 on an annual basis, what does that actually mean to you financially? And this is where it becomes powerful. So let's take $4,200. We'll give it a 10-year horizon, 8% rate of return, and more on that here in a second. And because that money, that savings doesn't go away, let's say the family continues just to save $4,000 of that per year. We're going to contribute it at the end of every year, 8% rate of return again, and by the end of 10 years, that simple game has now netted the family $67,000. Now, I want to actually take this up a little bit because if we look at the average S&P return for the last 5 years, or the last 30 years, it's averaged at 9%. So let's go ahead and plug in 9%. And yes, that doesn't include inflation, but it's just for simple math, we're going to do that. That becomes $70,000. Your simple game in 10 years has made the family $70,000. If we take this out over 20 years, it's now $228,000. And over 30 years, if the family can stay disciplined and probably even do better because you're going to be able to increase your savings, this is now a $600,000 gain. That is crazy. Now, instead of doing annually, something I want to look at is what if we do this at the beginning of each month? If we take that, what was our number here? $350 per month. So let's do $350 a month. Let's do it monthly and see if the $600,000 number changes. Just by doing it monthly, that's an extra $51,000 over 30 years. Now, is $651,000 enough to retire? Actually, maybe. In 30 years, will it be? Well, no, probably not with inflation and whatnot. But if you're doing other savings, you could easily have $1 million or more at the end of 30 years. And $651,000 of this is simply from playing a savings game. I hope this has been helpful to you. If you can implement this type of a game in your life, this can be life-changing just by being financially frugal and not really doing a lot that impacts your life. So if you have played this type of a game, or if you do play this game, in the comments down below, let others know where you were able to find the savings, what things you did to be able to improve your financial situation, and how much a month you're able to put away. So please let us know how this works for you. And again, if this is helpful, please do consider liking the video. If you like more content like this, consider subscribing to the channel. And if you know someone this may help, do consider sharing. Thanks for being here. We'll see you on the next one.